Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. And happy Friday to you guys. Hope you guys have some great upcoming plans here for the weekend here. It is September 21st, and we just got pretty quiet day today. We just got a couple items here on the economic calendar, and those are brought to you by the market PMI flash reports. So the first one we'll go over is the manufacturing report for the month of September. So back in August, it was 54.7, and it went up to 55.6. So on these two reports, anything above 50 is still considered optimism or expansion. So good thing manufacturing increase. We kind of saw that in some areas like Philadelphia just yesterday. Unfortunately, the other area, New York, went the opposite direction. We'll have to kind of wait and see where others like Chicago will come up at some point. But manufacturing overall looks like it went upwards. So that's a good sign for the month of September. Last but not least, we got the services industry. So unfortunately, that one went the opposite direction. We had a 54.8 in August, and it dropped to 52.9 in September. So obviously, it's something to keep an eye on, especially when it's so close to 50 here. Let's move over to the headline news. Stock market is up. The Dow and the S&P 500 are still reaching highs. They're back to those levels that we saw back in January and reaching new highs at this point. And again, they're continuing. The optimism or the sentiment is the economy is doing great, and so far talk about tariffs and everything else just kind of put it on the back burner. You know, they obviously are concerned about potential trade escalation and full trade war, but so far it doesn't seem to be affecting the economy, and the fundamentals, everything in the economy is looking fantastic. We're seeing some great numbers with the jobs. We're seeing great numbers in the output, corporate earnings. Everything is looking fantastic. So they're just basing everything off what they're seeing on the fundamentals of the economy, where things are looking towards. So that's obviously a very good sign here. So let's jump ahead to the bond market, see how it's playing out. So when we talked about yesterday, we had that leash effect. We're starting to show a little bit of, as you see, we touched below the next level of support here, broke and kind of pretty much right about the line here, and right now we're about where we left off yesterday. There's not much difference from where we left off yesterday. It did test it, but we're kind of pulling back a little bit. We could see a little bit more continued improvement, so definitely would suggest holding in there if you can about rate locks, but in any case, again, we're still fighting this here. It's still, as you can see here, it's an oversold position, and we're still haven't seen this go upwards. The stochastic we've been hoping here, the chart here, and we want to get above this red line and in between the green line. So the red line basically stands for every oversold, and then once we reach the green line, it becomes overbought. Is how that's translated. And then on the other side, we got the yields. So the yields are kind of an oversold type of position, and of course, we're starting to see that come down a little bit. We were up to about 3.08 yesterday. Now we're about 3.07. So we may see that come down a little bit as well. So stay tuned. Again, rates are about the same. We're not getting enough improvement yet, but we may see a little bit coming up maybe next week. We got a lot more action-packed news coming out next week, from inflation to housing, some more housing data and stuff. So stay tuned. That could definitely give some insight into the markets. If you guys want to see any change in the markets or any updates, just come over to Twitter. You can follow me at Mike Bjork and get your latest. Otherwise, you guys have a great upcoming weekend. Hope everything goes well for you guys, and we'll look forward to see you guys on Monday. Bye-bye.